Canoo is entering a $45 million deal, so what exactly is the company up to and should you buy the stock? Keep watching as we take you through all the details of this deal as well as a price analysis, but before we do that, subscribe to our channel $1 World for regular GOEV stock updates. Canoo, a prominent player in the world of advanced mobility, proudly trades on Nasdaq with the ticker symbol GOEV. In a recent and momentous development, the company has unveiled a substantial move. Canoo has inked a substantial agreement with a strategic institutional investor from overseas, securing an initial investment of a substantial $45 million. What's even more intriguing is that both Canoo and this foreign investor have expressed their mutual commitment to engage in productive discussions, aiming to potentially extend their financial collaboration to a staggering sum of up to $150 million. The timeline for the closing and execution of this deal is expected to be as swift as possible, pending the customary closing conditions. Tony Aquilla, a multifaceted figure who serves as Canoo's chairman, investor, and CEO, weighed in on this pivotal financial maneuver. Aquilla underscored the pivotal role that the capital raised through this convertible preferred stock offering plays in furthering Canoo's overarching mission. He emphasized that this strategic move aligns seamlessly with the company's disciplined and milestone-driven approach to securing vital capital, an approach that is crucial in meeting the surging demand from their ever-growing customer base. Delving into the particulars of the purchase agreement, we find that the investor in question will be acquiring a substantial sum of $45 million worth of Series B cumulative perpetual redeemable preferred stock. This particular class of stock is of significant seniority, holding a privileged position over common stock in the company's capital structure. Each share of this preferred stock carries a designated value of $1,000, and what sets it apart is the flexibility it offers when it comes to dividend payouts. Dividends on this preferred stock can be dispersed either in cash, in kind, or as the stockholders might prefer, in the form of common stock. The mechanics of these dividends are intricate but noteworthy. They will be dispersed at an annual rate of 7.50% from the original issuance date, continuing through the 5th anniversary of the closing date. Beyond this initial period, the dividend rate escalates by 1.50%, with the crucial maximum cap fixed at 12% per annum. A particularly intriguing aspect of this arrangement is the investor's prerogative to convert their preferred stock into common stock, and the conversion price for this option is meticulously set at 120% of the average closing prices per share of common stock over the preceding 10 trading days. As a part of this comprehensive purchase agreement, Canoo has gone a step further by issuing warrants to the investor, granting them the valuable right to purchase a significant 12.96 million shares of common stock. For those keen on exploring the nitty-gritty of the deal's terms and conditions, a treasure trove of information can be unearthed in the Form 8-K that Canoo has dutifully filed with the Securities and Exchange Commission. However, it's essential to note that this is just the beginning of what promises to be a fruitful financial partnership. Any subsequent investments and their specific terms will be meticulously discussed and mutually agreed upon by both parties at a later date. This announcement not only demonstrates Canoo's prowess in securing strategic investments, but also underscores its commitment to innovation in the advanced mobility sector. With a vision that looks beyond conventional norms, Canoo is positioning itself to be a major player in shaping the future of transportation as the demand for sustainable, technologically advanced mobility solutions continues to surge. Canoo's disciplined approach to securing capital ensures that they are well prepared to meet the needs of an ever-evolving market. In the dynamic landscape of advanced mobility, partnerships like these are the bedrock upon which innovation thrives. Canoo's ability to attract substantial investments and work collaboratively with strategic partners positions them for continued success in a competitive and rapidly changing industry. This infusion of capital not only strengthens their financial position, but also serves as a testament to the confidence that investors have in their vision and capabilities. In conclusion, Canoo's recent investment agreement with a foreign institutional investor marks a significant milestone in the company's journey to revolutionize the world of advanced mobility. This substantial capital injection, coupled with the flexibility offered by the convertible preferred stock, provides Canoo with the financial resources needed to drive their mission forward as the automotive and mobility industries continue to evolve. Canoo's strategic approach to securing capital positions them as a force to be reckoned with in shaping the future of transportation. With an eye on sustainability, innovation, and customer demand, Canoo is set to accelerate its growth and make a lasting impact in the world of advanced mobility. Enjoying the video so far? Be sure to join our Discord community to connect with other like-minded investors. Let's talk about Canoo Stock, As of October 3rd, 2023, Canoo Stock, or GOEV, closed at $0.4463, marking a decrease of $0.437, or approximately 8.92%. The trading volume for the day amounted to 15.92 million shares. The stock's price fluctuated throughout the day, reaching a high of $0.4969 and a low of $0.475. Over the past 52 weeks, the stock has experienced a range from a high of $2.04 to a low of $0.4135. The opening price on this particular day was $0.475, and the market capitalization of Canoo stood at $307.89 million. In terms of shares outstanding, Canoo had 628.34 million shares, with a public float of 502.25 million shares. The stock's beta, a measure of its sensitivity to market movements, was calculated at 0.82. This beta value suggests that Canoo's stock price tends to move in line with the broader market trends. One noteworthy aspect is that Canoo's price-to-earnings, or PTE ratio, is unavailable as the company reported negative earnings. Over the trailing 12 months, or TTM, Canoo had a negative earnings per share, or EPS, of negative 95 cents. Additionally, the stock does not yield dividends, making it a non-dividend paying stock. A significant factor to consider is the substantial short interest in Canoo stock, amounting to 69.66 million shares, which represents approximately 13.87% of the stock's float. This indicates that a substantial number of investors have taken a bearish stance, betting on the continued decline of Canoo's stock price. It's important to note that Canoo has experienced a substantial decrease in its stock price, with a decline of over 70% in the past year. This decline may be attributed to various factors, including market sentiment, changes in the electric vehicle industry, and the company's financial performance. Looking at the market, in the electric vehicle or EV stock market today, there's a mix of ups and downs. Fisker, a luxury EV manufacturer, is enjoying a 6.5% surge in its stock price, while Canoo, a rival company, is facing a 6.5% decline. Meanwhile, VinFast Auto is taking a significant 12.5% tumble. All three of these EV companies share a common challenge: financial difficulties. However, let's focus on Canoo's situation. Canoo recently announced its intention to raise capital by selling convertible preferred stock, aiming to secure at least $45 million, potentially up to $150 million. This preferred stock offers attractive dividends and the option for conversion into common stock. Investors might wonder why there are different reactions to Canoo and Fisker, as both are essentially seeking debt-like financing solutions to address cash flow issues. The distinction lies in the specifics of their financing arrangements. Fisker has issued convertible notes that claim to carry 0% interest, but it comes with a catch. These notes were issued at a 12% discount to face value. In essence, Fisker owes $170 million but received only $150 million in cash for the debt. Furthermore, Fisker is planning to issue potentially another $623.3 million of similar debt in the future. In contrast, Canoo's approach involves convertible preferred stock that carries a 7.5% dividend, with the potential for it to increase to 9% or even 12% after the initial 5 years. This means Canoo is committing to paying substantial dividends to investors who hold this preferred stock, reflecting its willingness to pay a premium for the capital it needs. The backdrop for these financial moves is a challenging one for Canoo. Over the past year, the company has incurred losses amounting to $358 million, highlighting the urgency of bolstering its financial position. While the details of these financing decisions may differ, both Canoo and Fisker are navigating financial turbulence, seeking funds to offset cash burn and keep their operations afloat. Remember that this is not financial advice, and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think the stock will make you rich or not in the comment section. Hit like and subscribe to our channel, $1 World, for more such penny stock videos, and we will see you in the next one.